much. But moving on from team leads, where we were talking about all the new roles and hirings coming in to the holiday season just around the corner, we have Kavinder Singh, who is joining in us from Mahindra Holidays. Kavinder, thank you so much for joining in with us on ET Now. It's a pleasure having you on the show. And holiday season is just around the corner. Finally, there is no lockdown, no severe lockdown, nothing. Everything is opening up. How are you seeing this holiday season shaping up? What are you seeing in terms of bookings coming in?
Can I say that the holiday season has indeed started? March, we are looking at 90% plus occupancies as we close March. So the holiday season has actually kick-started in right earnest. And April, we are looking at 86, 87% business on books. And so is the situation in May. So people are beginning to travel. And they are traveling with a vengeance. And our resorts, which are, as I mentioned to you, the occupancies are actually in some manner should give you a fairly good lead indicator as to how things are in terms of travel. I may also hasten to add that January, because of Omicron, the occupancies were low at 66%. We improved them in February. So therefore, this quarter looks good for us in terms of occupancies. We might close around 77, 78%. Considering the fact that quarter three is a seasonal quarter, we closed at 80%. This would be a relatively good quarter. And the best part is that we have also added new resorts, which I will talk about later.
When we just talk about the travel, the space, you think that, with prices going up all across for food, for stay, for travel, you think that has had any impact on people so far, or you think it will have an impact going ahead?
So if you really look at our business model, which is quite different from a traditional hospitality players, in our business model, we have a membership model. Members have paid for the membership fee. So to that extent, they do not have to pay for the rooms when they come to our resorts. Of course, they have to pay for F&B. So in line with the trends that we are seeing, there is going to be an accelerated demand for our memberships because people would see that the inflation trend being what it is, it would make sense for them to buy a membership so that they can protect themselves against the inflationary effects, particularly with regards to the room rates. The other immediate impact as far as our business is concerned, in the month of November, December, we have increased our membership fees as well as taken a small price hike in our F&B offerings at the resorts. And therefore, if you were to look at from our standpoint as a business, we are dealing with the inflation reasonably well. And more importantly, it could be a demand driver for our product because this is what really our product does. It allows you to holiday for the period that you have signed up the membership for without paying for the room.
Right. So just in terms of travel, hospitality, restaurants, it really had a big shock over the last couple of years, and it was very difficult for a lot of players, whether it was big or small. But now that it's returning, the sort of demand that you're witnessing, you think the opening up of new resorts, new spaces, new kind of restaurants would only increase from here on with the demand that you're seeing?
Yeah, if you really look at pandemic was a time where we actually added about 465 rooms in the room units, as we call them, because our rooms are bigger than traditional hospitality rooms. So we added about 465 of them in the last year. Even this year, our momentum of addition continues, and we are likely to close our total units, inventory units, as we call them, above 4,500. We are, by the way, the largest leisure hospitality player anyway. The other important point is we are adding destinations. We have added 3 international destinations, one in Bali, one in Pattaya, and other one in Sri Lanka. So adding destinations, adding resorts, adding unique experiences is going to be the way forward. And we are actually quite ready to do that. We have already done it in the last 2 years, which includes this year. And therefore, we are looking forward to continue with respect to adding new resorts as well as room units.
Right. Just in terms of an outlook for FY23, 1 year has been a washout for all the companies. You think over the next 2-3 years, all that will be made up?
Yeah, see, if you really look at it, for our business, it has not been a washout. We added members, we added inventory, we delivered profit growth, significant profit growth, upwards of about 20%. We have added cash. So for us, because of our different business model and the way we inspired confidence amongst our members to travel, and even last year, Jan, Feb, March quarter, we had 85% occupancy, 90% plus now in March. So you can see that it's also about inspiring confidence in people that the resorts are Bureau Veritas certified and safe. And that helped us to ride through these 2 years. Yes, looking forward over the next 2-3 years, I think there are good tailwinds for the leisure players and players like us who are, got a very clearly differentiated business model. We are not dependent on weddings. We are not dependent on events. So for us, over the next 2-3 years, we are really looking forward into the future with lots of confidence, both in terms of adding resorts as well as new member additions.
Right. And lastly, if you could just tell us in terms of, the company was actually looking at some distressed sale properties. Now, did you find anything, any update coming in on that front?
So, there are two ways to look at distress properties. There are properties which have come to us in the last year and a half. And even in the future, we are working with the owners who are not now keen to run their properties, and we are taking over them on lease. And we may not have had a chance to buy them out, but we have had lots of inventory addition through this route, where we work with the owner to bring that resort and the property to our standards. Yes, in terms of an actual acquisition of a property, there aren't many good properties at the right location, at the right price for us to buy. That work goes on. But the fact that we have been able to accelerate our room additions as well as resort additions clearly shows that there is a change in the market. And there are a lot of players who would like us to manage their property, or rather run the property. And when I say manage, it's not just management, actually taking over the property and giving them a fixed lease rental so that they can focus on their other businesses and we can focus on getting our members great experience. Even if we don't own the property, it's as good as ownership because it's a long-term lease and management of the property that we take over.
All right, so thank you so much, sir, for taking our time for us. Always good to get perspective. Hope you have some time to chat with us after Q4 and Q1 bookings are also out of the way. On that note, we're taking a break, coming back quickly. Stay tuned, lots more lined up, leaving you with markets flat with the negative bias.